Hello traders, this is Alexander from the Forex Authority and the FX Model software. Today's video is on the Euro 15-minute charts hosted in eSignal. This also works in TradeStation. I have drawn some vertical lines which will delineate anything that occurred during the North American or European sessions. I have X'd out or taken out, as you can see between these red and blue lines, you'll see big X's. I've taken out any of the Asian session trades, and I'm only going to track the North American and European sessions. All right, let's start off. We'll go back 1 week in time, and we'll just go through it, and you'll get some sense of the dots that signal, and also the profit potential that the Forex model delivers consistently. At the beginning of last week, or 1 week ago, let's just call it, on the 17th, we had a counter trend dot. Any black dots you see on the charts are counter trend dots. And they're perfectly legitimate to use as long as the RSI indicator, RSIX indicator, is overbought or oversold, and there's some kind of structure or divergence present. All of this is explained in great detail in the manual that you receive with the software, and also in the live support. So an easy way to determine whether or not any of these black dots are oversold or overbought is you can just look at the cursor window, and if it turns bright red or it turns this kind of highlighted blue, we know it's overbought and oversold. So that's a quick visual. And let's just go through trade by trade, and we'll just see how we did here. We started off with a counter trend dot, and we exited when this opposite buy with trend dot, which is a red dot, appeared. And in that stop and reverse, you stopped and reverse for minus 15 pips. This particular trade went nowhere. It did not move in the direction that we wanted it to move, and we were stopped out for a minus 35 pips. This was not a valid counter trend dot. As you can see on the cursor window, it simply was not oversold at that point. But the next counter trend dot to signal was oversold. And we entered that trade and exited on this opposite dot right here, 468 pips. Total for that day, 110 pips. The next opportunity to enter was at this buy with trend dot, and we entered that trade and exited on an opposite dot. And in this situation, we actually got to stop and reverse on this opposite dot. So we went long here, stopped and reversed on this particular dot. We were up 139 pips at this point. We had our stops placed up above, and this trade continued to move down, and our short position proved profitable, and we exited on this dot. And in fact, we stopped and reversed again on this dot. This counter trend dot was oversold, and it had structure to the left. So we gained 100 pips on that. So our first two trades of that day, 239 pips, and we stop and reverse on this one and exit on this particular dot right here. It is not another stop and reverse because the RSIX indicator is not overbought. Total for that day, 245 pips in total for that day. Traders who took the last trade of the day, my apologies, we have one last, traders who took this last trade of the day right here, late in the afternoon, would have exited on a graceful exit for minus 45 pips. And I'll total all this up at the end, so you don't have to keep track of this in your head. So the next opportunity to trade in the London session was this particular sell with trend dot. Any dot that appears above is a sell. Any dot that appears below is a buy, if you haven't figured that out already. And so this particular dot, you were in the trade on this bar right here, and this trade went nowhere. And so what we do is we employ a 10-bar rule, and that'll be a graceful exit. So if this trade has gone nowhere in 10 bars, then we exit the trade on the close of the 10th bar, and in that case we did that for minus 38 pips. There was another sell with trend dot that appeared soon afterwards, and this particular trade was stopped out as the market moved like a freight train in the opposite direction. Stops would have been placed above the last structure prior to this sell with trend. So you would have had your stops here, and you would have been stopped out for minus 60 pips. And the next opportunity to get into the market was a buy with trend dot, and with an exit, a graceful exit for a minus 1 pip at the end of 10 bars, because this trade had gone nowhere. From the entry price right here to 10 bars later, it had gone nowhere, so you exit. The next opportunity to enter the market was on this buy with trend dot, and you entered that trade and exited. In fact, did a stop and reverse on this particular trade right here, and for a gain of 37 pips, with an exit right here on this opposite dot, or a graceful exit. And I didn't calculate that one, so I'll just do that on the fly right now. So we had a minus 33 pips right there. And the next opportunity to trade, so we had this stop and reverse. We gracefully exited on the 10th bar for minus 33. Then we had a buy with trend dot, and you entered that trade and you exited. This is the first opportunity we've had to see this. There was no opposite dot that occurred as the market retraced. So the other method of exiting is you use the MACD histogram, and if it crosses back over again, you exit on the close of when it crosses over, and you gained 200 pips on that particular trade right there, and a total for that day of 204 pips. Next opportunity to trade was this particular dot right here, which was oversold, and you exited on this particular dot right here, this counter trend dot, which was overbought for a plus 40 pips. We are short at this point, and I believe that actually that minus 19 is actually for a graceful exit. 2, 4, 6, 8, 10. Yes, that's correct. The minus 19 pips is actually calculated based on a graceful exit at this point, and if you had exited on this opposite dot right here, you would have been probably 0 pips or plus or 1 pips. And the next dot to signal was this counter trend dot right here. However, it was not overbought, so it is not a valid trade. And so the next valid dot to occur was this dot right here, and we went short on this counter trend dot that was overbought, and you exited on this particular opposite dot here for plus 45 pips. A total of, we're going to have to correct that, a total of 400 and we'll just call it 470 pips. And for another great week in the euro, the same performance was found in the pound, euro, yen, Swissy, and yen. And so I hope you enjoyed this video, and you can hopefully see the power of the Forex Model software. Make sure you check out our website at www.forexauthority.com. There's lots of information, detailed information about the model on the site. Thanks, and have a great day. On behalf of the Forex Authority, I'd like to thank you for watching this video, and I invite you to visit our website at www.forexauthority.com, where you can sign up for a live demo or our newsletter for more information.